Virtual currency, cryptocurrency. Currency is money in any form when in use or circulation as a medium of exchange. When a currency is legally recognized by a government to be valid for meeting a financial obligation, it is called legal tender. Coins and banknotes are usually defined as legal tender in most countries. Legal tender is backed by a central government, and the government controls the supply. Virtual currency is not legal tender and it is not backed by a central government or bank. It is decentralized and is global. It is a digital representation of value that functions as a medium of exchange, a unit of account, and a store of value other than a representation of the US dollar or a foreign currency. Cryptocurrency is a type of virtual currency that utilizes cryptography to secure transactions that are digitally recorded on a distributed ledger, such as a blockchain. Units of cryptocurrency are generally referred to as coins or tokens. Fair market value (FMV). For federal income tax purposes, transactions using virtual currency must be reported in US dollars. You will be required to determine the FMV as of the date of payment or receipt of the virtual currency. Virtual currency income received. Barter income. When you barter with someone, you are exchanging one good or service for another without the payment of money. Barter exchanges are common in virtual currency exchanges. The FMV of virtual currency received in a barter exchange is subject to income tax as if it was US dollars. When virtual currency is received in the course of a trade or business, the FMV of the virtual currency must be included in business income in the year of receipt and is subject to self-employment tax. Example: Jill has a cleaning business and cleans George's house for a year in exchange for 1 Bitcoin. The FMV of the Bitcoin when received is $15,000. Jill recognizes $15,000 as business income on her tax return even though she did not receive any US dollars. Employees. The FMV of virtual currency paid as wages is subject to federal income tax withholding, FICA tax, and unemployment taxes. It also must be reported on Form W-2, wage and tax statement. Virtual currency used to purchase goods or services for federal income tax purposes. The main difference between using virtual currency to purchase goods or services versus the US dollar is that virtual currency is treated as property. The tax basis of the US dollar is its face value. When a product or service is purchased using the US dollar, there is no gain or loss on the exchange of that US dollar for the product or service. In contrast, the tax basis of virtual currency is the cost to acquire it. When a product or service is purchased using virtual currency, gain or loss is the difference between the fair market value of the product or service and the cost basis in the virtual currency that is exchanged for that product or service. Example number 1. Brad uses $2 to purchase a cup of coffee. Since Brad's tax basis in those $2 is their face value, $2, and the fair market value of the cup of coffee is $2, there is no gain or loss on the transaction. Example number 2. Brad uses virtual currency to purchase a cup of coffee that is worth $2. Brad had previously acquired the virtual currency at an ATM machine by exchanging $1 for the virtual currency. Brad has a $1 taxable gain on the purchase of the coffee. The difference between the fair market value of the coffee, $2, and the tax basis in the virtual currency, $1. Mining. Virtual currency miners. Mining is a process through which blockchain transactions are verified and accepted by adding such transactions to a blockchain ledger. Miners use computers to solve mathematical equations that are part of the encryption process. The first miner who solves the transaction and validates it receives a digital token of virtual currency as a reward. Gross income is realized upon the receipt of the digital token. The FMV of the virtual currency as of the date of receipt is includable in gross income. If you are in the trade of business of mining, the gross income is net earnings from self-employment and subject to self-employment tax. Tax reporting for virtual currency purchases and exchanges. If you purchase or exchange virtual currency, it is treated as the sale or exchange of property. If held as a capital asset and disposed of, a transaction involving virtual currency is reported on Form 8949, Sales and Other Dispositions of Capital Assets, and Schedule D, Form 1040, Capital Gains and Losses. There is a box to check on Form 1040 if you engaged in any transaction involving virtual currency during the tax year, even if it was not disposed of. To report transactions involving virtual currency, your tax preparer will need information from you including the date acquired, date sold, exchanged, purchase price, sales price, number of units exchanged, and a description of the property. Important changes to the child tax credit will help many families get advance payments of the credit starting this summer. The IRS will pay half the total credit amount in advance monthly payments beginning July 15. You will claim the other half when you file your 2021 income tax return. These changes apply to tax year 2021 only. To qualify for advanced child tax credit payments, you and your spouse, if you filed a joint return, must have filed a 2019 or 2020 tax return and claimed the child tax credit on the return, or given the IRS your information in 2020 to receive the economic impact payment using the non-filers Enter Payment Info Here tool, and a main home in the United States for more than half the year, the 50 states and the District of Columbia, or file a joint return with a spouse who has a main home in the United States for more than half the year, and a qualifying child who is under age 18 at the end of 2021 and who has a valid Social Security number, and made less than certain income limits. The IRS will use information you provided to determine if you qualify and automatically enroll you for advance payments. You do not need to take any additional action to get advance payments. Caution: the total amount of the advance child tax credit payments that you receive during 2021 is based on the IRS's estimate of your 2021 child tax credit. If the total advance payment is greater than the child tax credit amount you are allowed to claim on your 2021 tax return, you may have to repay the excess amount on your 2021 tax return. You may have received an excess credit due to changes in your income, marital status, or number of qualifying children. Repayment Protection Safe Harbor. You may not have to repay some or all of any excess advance child tax credit amount if the excess payment is caused by a change in the number of qualifying children and your income is below a specified amount for your filing status. The maximum amount of repayment protection is $2,000 for each qualifying child that the IRS took into account when estimating your advance child tax credit. You qualify for the maximum amount if your modified adjusted gross income (AGI) is at or below the following amounts based on the filing status for your 2021 income tax return. $60,000 if you are married and filing a joint return or filing as a qualifying widow, or $50,000 if you are filing as head of household. $40,000 if you are a single filer or married and filing a separate return. As your income increases over the above threshold amount, the amount of the repayment protection decreases. You will not qualify for any repayment protection once your modified AGI reaches the following levels. $120,000 if you are married and filing a joint return or filing as a qualifying widow, or $100,000 if you are filing as head of household. $80,000 if you are a single filer or married and filing a separate return. CTC UP. Use the IRS Child Tax Credit Update Portal (CTC UP) throughout 2021 to help ensure the IRS has the most up-to-date information about your eligibility for the 2021 child tax credit and to minimize any potential excess payment. You will find the CTC UP at the IRS website listed earlier. Payments start July 15, 2021. Eligible families can receive advance payments of up to $300 per month for each child under age 6 and up to $250 per month for each child age 6 and above. Advance payments begin July 15 and will be sent monthly through December 15 without any further action. You can benefit from the credit even if you do not have earned income or you do not owe any income taxes. The credit includes children who turn age 17 in 2021.